Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LEXEO Therapeutics INC quarterly report. LEXEO Therapeutics Inc. offers a range of businesses and services including gene therapy development for hereditary and acquired diseases, clinical trials for LEXEO-1006, Friedreich ataxia cardiomyopathy, LX2020, PKP2-ACM, LZone-1001, APO-F-associated Alzheimer's disease, preclinical research for LX2021, CX43 protein, and LX2022, TNN-I3 gene, licensing agreements with Cornell University for the development of LZone-1001 and LZone-1000, and 4 programs research collaboration with Cornell University to develop licensed technology gene therapy candidate development for FA cardiomyopathy. LEXEO Therapeutics, Inc. LEXEO stock price has remained relatively stable with no significant changes over the past year. While several news events occurred during this period, it's challenging to confirm their direct impact on the stock price without specific data on how the stock reacted on the exact day of each announcement. The company reported its financial results and operational highlights for various quarters, participated in conferences and webcasts, announced regulatory updates, and provided interim Phase 1/2 data updates. However, these events did not seem to have a substantial impact on the stock price, which remained steady at 0% change over the past year. The lack of significant changes in the stock price may be attributed to the fact that LEXEO Therapeutics has been consistently reporting positive developments and milestones in its research and development efforts. The company's stable financial performance and operational highlights may have contributed to a sense of stability and predictability, which could have led investors to maintain their existing positions without making significant changes. Ultimately, the exact reasons for the stock price remaining unchanged are unclear without specific data on how the stock reacted to each news event. However, it's possible that LEXEO Therapeutics' consistent progress and stable financial performance may have contributed to its relatively stable stock price over the past year. The primary drivers of revenue growth or decline in a company is often influenced by several key factors. For our analysis, we have identified the primary drivers as follows. Commercialization of product candidates is a significant driver of revenue growth. Regulatory approvals for successfully completed clinical trials also play a crucial role in increasing revenue. The successful development and regulatory approval of gene therapy candidates, such as LX2006 and LX2020, contribute to revenue growth. Collaboration or license agreements with third parties can lead to increased revenue through product sales, royalties, and payments from these agreements. Milestone payments from Cornell license agreements also contribute to revenue growth. Additionally, regulatory milestones and commercial milestones from Cornell license agreements further boost revenue. Royalties on net sales from Cornell license agreements and development and commercialization milestones from UCSD agreements are other key drivers of revenue growth or decline. These factors collectively influence the company's revenue trajectory. Net income and profit margins decline due to development challenges. The company's net income has seen a decline in recent years. In 2024, the net loss was $98.3 million, which decreased by $6.6 million to a net loss of $79 million in the 9 months ended September 30, 2025. This downward trend is attributed to several factors. The company's profit margins are also expected to decrease due to potential delays in development and commercialization, increased costs, and loss of revenue. Manufacturing problems, regulatory compliance issues, supply chain disruptions, and dependence on third-party manufacturers have contributed to the decline. Additionally, changes in Medicaid coverage and reimbursement rates may further impact profit margins. The company's early clinical stages of development have led to significant expenses and operating losses. Cost containment policies and executive orders have also played a role in decreasing net income and profit margins. These challenges highlight the need for the company to address its operational issues and adapt to changing market conditions. The company's financial performance indicates a consistent trend of negative operating cash flow. For both 2025 and 2024, the operating cash flow was in the red, with figures of $78,482, $1,000 and $52,825, $1,000 respectively. This suggests that the company is struggling to generate sufficient cash from its operations, posing a significant challenge for its financial sustainability. The company's debt level has shown a significant decrease in recent years. The non-current portion of lease liabilities decreased from $817 to $454, while total debt investments dropped from $111,152 to $100,188. This reduction in debt is accompanied by a notable decline in interest expenses, which fell from $107,000 to $75,000 between 2024 and 2025. Overall, the company's financial situation appears to be improving, with reduced debt levels and lower interest expenses. Management's outlook on company strategy. The company expects significant net losses in the foreseeable future due to substantial operating losses and negative cash flows from operations. To achieve profitability, management anticipates significant revenue growth, but acknowledges that additional financing is required. The business will be harmed if product candidates are not advanced through clinical trials or regulatory approval is not obtained. Management is focused on developing high-probability product candidates with technical and regulatory success. However, the company faces substantial funding requirements for ongoing operations, clinical development, commercialization, and operating as a public company. Regulatory challenges, including lengthy and unpredictable approval processes, also pose significant risks to the business. The competitive landscape is expected to be challenging due to competition in the biologics market under the Biologics Price Competition and Innovation Act, BPCIA. Patent protection for products is uncertain, and government policies may impact the company's ability to set adequate pricing, attract investors, and achieve profitability. The company has a history of buying back its own shares. In 2024, it repurchased 3827 shares at a total cost of $17,000. Additionally, in 2024, the company also bought back shares through private placement offerings for a total of $174,998. This indicates that the company has chosen to invest in itself by reducing its outstanding share count rather than distributing dividends to shareholders. Concerns about inventory buildup and supply chain disruption are evident throughout various sections of the financial summary. The risk of contamination during manufacturing, shortages of raw materials, and suppliers' failure to deliver necessary components could lead to delays, page 71. Additionally, there is a general concern about inventory buildup or supply chain disruption on page 104. The situation is further exacerbated by global events such as wars in Ukraine and Israel, which have caused disruptions in the global supply chain and energy markets, page 106. Ongoing military conflicts and increasing tensions between countries are also contributing to supply chain shortages and delays in manufacturing sufficient quantities of materials, page 109. These concerns highlight the potential for significant disruptions to the company's operations and ability to meet demand. That concludes the financial summary for LEXEO Therapeutics Inc. Feel free to comment below, and I will be happy to answer them when possible.